Gosh, so you'd think the world is ending with the way that headlines are right now about earnings season. I mean, check this out. I just Googled this, okay? Earnings season. That's it. And this is what came up for me. 4 factors to watch out for this earnings season. Likely to give mixed signals. Okay, fine. Apple facing brutal earnings season. Stock slip as investors weigh Fed minutes and earnings. Okay. Not saying it's not legitimate, guys, but I want you to keep looking at what else is coming up here, okay? Lots of earnings will be bad. I mean, some of them are just outright saying it. Now, we're going to look at individual stock sector ETFs here in a moment, but I also want to show you what happens when you Google earnings calendar, okay? So earnings come out the month after a quarter ends. So we just finished Q3 of 2022 with September. We're in October. So now we're going to get all kinds of earnings reports for company performance in Q3. And there's all kinds of calendars out there. And I'll give you a little hint. I won't dig into it, but my favorite one that I've used for many years is Earnings Whispers, okay? Earningswhispers.com. Got that idea from my late father, used it with him, and I still look at it. Now, we will look at individual stocks as market action unfolds, but I really want you guys to have like a solid grasp on earnings season by keeping your focus on the big picture, then going down lower. So, before we go look at the charts, important reminder that trading and investing can be extremely risky business. Therefore, it's your responsibility to evaluate any information, opinion, advice, or other content contained in this video. Now, if you're new here, I'm Hema Reddy, and I use price action, momentum, and market timing or forecasting to trade and help traders boost their results. So we are here in my TradeStation, and I now have pulled up the sectors of the S&P 500 that are the SPDR ETFs, okay? These are specific ETFs put out by State Street. You could Google any one of these tickers and see that information. Now, the way these are currently ranked is based off a proprietary method I use when I review charts and make stock picks every weekend/Tuesday, okay? So I do it early in the week. Now, I wanna walk you through something. We're gonna go through every one of these sectors really quick because we're gonna use analysis that I go to all the time to get a quick idea of where each sector is. So right now, as it stands, XLE is still the strongest sector. Now, oil has actually been recovering and is starting to back off, but the sector that has the stocks in it, right, doesn't behave exactly the same way as oil. So there will be differences. And no matter what the movement of oil is, you can find opportunities to go long or short in XLE stocks. So the actual individual stocks, I have all listed out in a separate tab, but we're just looking at the sector right now, okay? I have plotted my triple moving average filter. This is really helpful if you're newer to trading, where it helps you get a sense of the direction of the market. And I have my RSI power zones down below. That's my favorite momentum indicator. Both of those are detailed and taught in full in the 4 zones RSI coverage system. So XLE, you can see that we have returned to the August 29th peak and been backing off. Right now, guys, I think this is still in a whole sideways mess, and this is where we're going to push past technicals and look at the real world. And guess what? I'm just looking at my calendar here. We have coming up on Tuesday, November 8th, a very, very important election, okay? So it's my personal opinion that the current administration is going to do everything in their power to not have oil prices rise into the election so that they can try to get as many votes as they can to stay in office. It's just an opinion. That's not market fact, okay? But it's a very politicized thing, oil, right? Oil lobbies, oil company lobbies spend more money than I think pretty much anyone else. So it's a real factor. And so any positions you take on XLE, I would be conscientious of this sideways range that we're in from about 85 to 65, and then translate that over the individual stocks. All right. Now, XLV, this is the healthcare sector. And this has been weak, but again, if you look at its past history, it's been weak within the context of a very broad, big sideways range. And this range is essentially bound between like 120-ish, okay, and 145-ish, 143 if you want to get more specific. So right now we're at the lower ends on XLV. So I think there's room for it to find maybe a short-term footing, but I don't know if that's going to last, and I think we're going to come back to the June lows on XLV. XLI. XLI has a more clear downtrend, and hopefully you guys can see how I'm going from the quote-unquote strongest sector and working my way down. Okay, it doesn't mean the market's particularly strong right now, But by going from XLE to XLV, we're now in XLI, the next weakest thing, okay? You are the weakest link. Sorry, I just remembered that show. Okay, XLI, industrials. Here you can see that we have actually broken below those June lows. So this is not looking so hot. I would stick to any shorts in XLI for the time being. XLY as a sector, okay, consumer discretionary. Here you can see that it has these letters HB next to it. That means the sector, okay, if you were going to try and trade the ETF, HB stands for hard to borrow. You can't borrow shares to go short right now very easily or at all. That's going to depend on where you're trading, what your broker's access is like and all that. So when you see that, it's usually a sign that that market's weak, and it doesn't mean you can hop on that train and go short it, but you should at least be aware. Now, XLY has not returned to the June lows, but it looks like on track to get there, okay? We've got these widening moving averages well below the long-term one. And again, the details of the moving averages, how I use them, how they're set up, it's all in the 4 zones RSI coverage system. Okay, we've got XLF financials. And you can see we're still just trekking back to the fall of 2020, okay? And making moves there. So still have room to go lower. I think the next major support on the XLF is this January 2020 low, so call about 28, 29. XLB is weaker still. Again, we're going down from strongest to weakest. And those of you who study RSI power zones, you already got some education. I recommend that you come back and watch this video again, and instead of focusing your eyeballs up here, focus your eyeballs down here and notice how the RSI changes as you're studying a stronger ETF to a weaker ETF. XLB, it's not looking so hot for materials. I think we're on our way back to this October 2020 range. Again, not necessarily going to happen overnight. I think this might happen into late October into November. XLP, consumer staples, right? We have consumer discretionary, now we have consumer staples. Now, this has also broken below its June lows and looks like it's on its way back towards its March 2021 lows. Again, when I say on its way back, I don't mean it's just going to drop without rallies. So any strength in this market, if you were trading this ETF, it's an opportunity to look for a short. But you also want to be conscientious of when there's a disconnect between price and momentum, like there is here. If you have 4 zones RSI, you know what's up, okay? And you just want to be careful that you don't go short at the end of a down move. You want to go short on a recovery and then ride the wave down. Okay, XLU, okay, utilities. My goodness, they have been quite volatile here, tanking since September 12th. And you may recall that was the day before we got the latest CPI data, which was hotter than expected for August. And right now we're sitting here on October 12th. Tomorrow is another 13th. I'm really not a fan of the number 13 right now because not only do I not like scary Halloween movies, I don't like how inflation is looking. And if tomorrow's number is hot at all, market probably really won't like it. So XLU continues to fall. It is very interest rate sensitive. So that's why what policy the Fed does based on the CPI and other inflation numbers is really going to affect the sector. I'm pretty sure she is on her way back to the February 2021 low. Again, over coming weeks, okay? Don't just sell now on a stock in that sector, right? They all would be listed on my tab here. Look for a recovery bounce to sell into if you get the opportunity that fits your risk reward. Okay, XLK is, we're almost at the end, okay? This is the back of the class, guys. These are the weaker sectors. XLK on its way to October 2020 low. XLRE, okay, your real estate select. This is almost already returned to the 2020 low. So if we want to see what's behind that, I'm going to go ahead and just add more data. I'm not going to change the time frame. I'm just going to go and say, well, let's just look like 5 years back. And lo and behold, you can now see that when you look back behind that October 2020 low, we have a June 2020 low and then May. So the June is the next target right here, about 33, and then it would be 30 if it really pushes below that. And last but not least, XLC. And you can see how far away this is pulled from its larger moving average. I mean, this is a very, very weak sector. So definitely showing that it wants to get back towards a pandemic low. I mean, I just don't have any other way to say it. But again, I'm not saying because we're going to likely get back to those March 2020 lows, you just stick your hand out and sell now. No, because you need to look at what is happening at any given time with price and momentum. You need to really focus in and say, am I on the recovery bounce, like back here? Okay, this would be a great opportunity to take advantage of that bounce. There are useful tips here in the moving average and RSI power zones that would have clued you in, and then you could have sold. Same thing here. Maybe we missed it back here, and there's more downside. Depends on your risk reward. If you can put a stop above, $51 and sell short here, great. That's the ETF, right? You look at the individual stocks. But I really want you to be aware of selling on the bounces, not selling on the breakdowns. You have better risk to reward in your trade if you sell into those short-term blips of strength, not just when the market breaks to new lows. And this is going to be extremely helpful as we navigate what I think is going to continue to be a weak market. And a weak market, it doesn't have a quantity to it, guys. Okay, I don't have a crystal ball, but I have a lot of tools under my belt that if you watch me in my YouTube channel, if you check out any of my videos anywhere on social media, if you're in my tribe, you will see me over and over and over again deploy these tools. And I really want you to understand that I am willing and ready to shift how I look at the markets with you to accommodate the new world we're likely in of some sort of recession and a bear market that is probably not over soon, okay? There's still room to make money in it. Just because it's going the other way doesn't mean you can't trade. So, hope you found value in this video. Hope it reminded you of some things you want to focus in on your trading. And I look forward to diving into earnings season with you guys. It's going to be exciting. So if you got any golden nuggets from here, please share your comments down below. Join my tribe if you haven't already, and I'll catch you on the inside. You can sign up at the link to join my tribe and get my hot, timely, actionable updates as soon as I publish them right to your email inbox.